Take a hard look at the brutal reality unfolding every single day. Most people will spend 40 years of their lives, day in and day out, pouring their sweat and soul into their work, only to reach their golden years with empty hands or just enough to barely scrape by. This tragedy doesn't happen because they are lazy, and it's not because they were born under an unlucky star. It happens because they spent 4 decades, their most precious years, operating their brains on the employee mindset, even while their souls desperately craved the freedom of an owner. I am going to tell you a harsh truth that might sting, it might even offend you, but this exact truth is what will save you from decades of financial mediocrity. You must etch this into your mind. The employee mindset is a sophisticated psychological trap, masterfully disguised as security. If you don't learn to reprogram your brain today, you will have a devastating realization at age 65. You'll see that job security and financial security are 2 completely different things. In fact, they are often in direct opposition to each other. So, what exactly is this employee mindset? It is when you accept the trade of your most limited, non-renewable asset, time, for a fixed number on a paycheck. You passively wait for someone else's permission before you dare to act. You hand over the power to an organization or a boss to dictate what you are worth. You optimize your entire life for short-term safety instead of long-term understanding. You celebrate every month when that direct deposit hits, but you never stay sober enough to question the fundamental rules of the game you are playing. Let me tell you the naked truth that no career counselor or corporate recruiter will ever dare to reveal. Having a job is an excellent source of income to sustain your life, but it is the absolute worst strategy for building real wealth. The employment system was designed to compensate you fairly for your time. It was never designed to make you rich. Once you see through the economic incentives, it becomes clear as day. A business owner pays you just enough to keep you from quitting, but never enough for you to accumulate enough capital to become financially independent. Why? It's not out of malice, it's mathematics. It's the law of corporate survival. If they paid you the full true value you create for the enterprise, there would be no profit left for them to exist. Show me the incentive, and I'll show you the outcome. Here is where it gets interesting. You can absolutely hold a job and still think like an owner. You can collect a salary and still build a massive fortune. However, you cannot do it while your brain is running on the default employee software. The transformation doesn't start with handing in your resignation tomorrow morning. It starts by understanding the fundamental difference between renting out your time and owning assets that compound. Charlie Munger identified 3 invisible psychological shackles, 3 mental tendencies that graft people to the floor of the corporate world. First is incentive-caused bias. When you are paid by the hour or by a monthly salary, your brain falls into a dangerous trap. You unconsciously begin to optimize for time spent rather than value created. You start measuring your worth by how many hours you sat at your desk or how busy you appeared to be. You become a prisoner of the time clock. You mislead yourself into believing that more hours equals more value, but in reality, you are just selling your life for a fixed price while creating zero leverage for your future. Second is authority tendency. This is a lethal trap for independent thought. You learn to bow to the boss, blindly follow rigid company policies, and worship the organizational chart. You gradually stop thinking for yourself because you've been conditioned to believe that someone higher up is being paid to do the thinking for you. But wake up. Your boss's job is not to make you wealthy. Their only job is to extract the maximum possible value from the block of time you sold them. When you stop thinking about your own financial destiny, you have effectively handed the keys to your life to a stranger. Third is social proof tendency. This is the crushing weight of the crowd. Look around you. Everyone is exhausted, desperately trying to climb the corporate ladder, so you start climbing too. When everyone celebrates a measly 5% annual raise as if they won the lottery, you celebrate with them. You feel safe because you are doing what everyone else is doing. But you are forgetting one vital fact. That herd is not moving toward financial independence. They are moving toward comfortable dependency. They are satisfied being just another cog in someone else's machine. If you keep looking to your left and right to decide how to act, you will end up exactly where they are, living a mediocre life, constantly trembling at the mercy of the next economic downturn. Here is where it gets interesting. You can absolutely hold a job and still think like an owner. You can collect a salary and still build a massive fortune. However, you cannot do it while your brain is running on the default employee software. The transformation doesn't start with handing in your resignation tomorrow morning. It starts by understanding the fundamental difference between renting out your time and owning assets that compound. Charlie Munger identified 3 invisible psychological shackles, 3 mental tendencies that graft people to the floor of the corporate world. First is incentive-caused bias. When you are paid by the hour or by a monthly salary, your brain falls into a dangerous trap. You unconsciously begin to optimize for time spent rather than value created. You start measuring your worth by how many hours you sat at your desk or how busy you appeared to be. You become a prisoner of the time clock. You mislead yourself into believing that more hours equals more value, but in reality, you are just selling your life for a fixed price while creating zero leverage for your future. Second is authority tendency. This is a lethal trap for independent thought. You learn to bow to the boss, blindly follow rigid company policies, and worship the organizational chart. You gradually stop thinking for yourself because you've been conditioned to believe that someone higher up is being paid to do the thinking for you. But wake up. Your boss's job is not to make you wealthy. Their only job is to extract the maximum possible value from the block of time you sold them. When you stop thinking about your own financial destiny, you have effectively handed the keys to your life to a stranger. Third is social proof tendency. This is the crushing weight of the crowd. Look around you. Everyone is exhausted, desperately trying to climb the corporate ladder, so you start climbing too. When everyone celebrates a measly 5% annual raise as if they won the lottery, you celebrate with them. You feel safe because you are doing what everyone else is doing. But you are forgetting one vital fact. That herd is not moving toward financial independence. They are moving toward comfortable dependency. They are satisfied being just another cog in someone else's machine. If you keep looking to your left and right to decide how to act, you will end up exactly where they are, living a mediocre life, constantly trembling at the mercy of the next economic downturn. Now, you might be asking yourself, how do I actually make this shift when I still have a mountain of bills to pay and a full-time job consuming my entire day? Listen closely. You do not need to quit your job to start thinking like an owner. In fact, a stable job is the most perfect laboratory imaginable for developing this mindset. Why? Because you have a safety net. You have a steady stream of income to cover your basic needs, which allows you to take massive risks with your learning without betting your actual life on it. You have the privilege of studying an industry from the inside, right at the heart of the machine. When Warren and I looked at See's candies, we didn't buy it because it looked fun or flashy. We bought it because the underlying mathematics were undeniable. It had pricing power, it had brand loyalty, and it generated massive amounts of cash that we could redeploy into other opportunities. That is owner thinking, understanding the deep economic reality to make sound judgments. While an employee looks at C's and sees a shop that sells chocolates, an owner looks at it and sees a cash-generating machine with a durable competitive advantage. That difference in perspective is worth millions of dollars over the course of your life. Here is the 4-step framework to begin your transformation today. First, study your company like you're the one who owns it. Stop just doing your assigned tasks. Read the annual reports. Understand the unit economics. Ask yourself, how does this company actually make a profit? Where are the fatal vulnerabilities? What is the moat that protects us from competitors? This costs you $0. It only costs your attention and your curiosity. Second, start allocating capital with the discipline of a hedge fund manager, even if you're starting with pennies. Every single dollar you waste on mindless consumption is a soldier you've stripped away from your army of compounding interest. The habit of thinking like a capital allocator is far more important than the initial amount of capital you possess. Third, build skills that create enterprise value instead of just task value. Task value is, I can process these forms quickly. Enterprise value is, I understand how to re-engineer this entire system to double its efficiency. One keeps you employed, the other makes you invaluable to any organization on earth, including the one you will eventually own. Fourth, build a latticework of mental models. Business problems are never just business problems. They are psychology problems, math problems, and systems problems. You need to understand psychology to know why people make irrational decisions. You need economics to understand incentives. You need mathematics to understand probability and compounding. You need the big ideas from the big disciplines to see the full picture. Over the decades, I've learned a lesson that is worth more than any IQ point. You don't need to be a brilliant genius to build wealth. You just have to be consistently not stupid. It is remarkable how much long-term advantage people like us have gotten by simply trying to avoid the big obvious mistakes that everyone else is making. If you want to reach the finish line of financial independence, you must steer clear of the fatal errors that bankrupt most lives. Stop trading your time for money as your only strategy. Stop spending every dime you earn just to maintain a lifestyle you can't actually afford. Stop following the herd into the abyss of financial mediocrity. And most importantly, never confuse activity with progress. There is a secret in investing that most people hate to hear. The big money isn't in the buying and the selling. The big money is in the waiting. This is where the employee mindset fails most miserably. It is fundamentally impatient. It wants the raise today, the promotion next year, and immediate gratification every weekend. The employee optimizes for next month's bills. But the owner mindset is built on a different timeline altogether. It builds something today and has the discipline to let it compound for 30 years. I didn't succeed because of some superhuman intelligence. I succeeded because I have an unusually long attention span. I could stay focused on the same fundamental principles and the same mental models for 50 years while everyone else was busy chasing the next shiny object or the latest market fad. That ironclad focus is the ultimate competitive advantage of the owner. Look at Berkshire Hathaway. Warren and I didn't build it by being the smartest guys in the room. We built it by consistently applying sound principles, staying within our circle of competence, and letting the mirth of compound interest do the heavy lifting. Most people never build wealth because they never think past the next 30 days. They optimize for the next car payment or the next vacation. They never stop to ask the one question that changes everything. Where will I be in 30 years if I keep walking this exact path? Here is the ultimate test I want you to apply to your own life. Look at the people who are 20 years ahead of you on your current career trajectory. If they are financially independent, intellectually fulfilled, and truly free, then keep going. But if they are still shackled to a paycheck, drowning in debt, and worried about the next recession, change course immediately. Their present is your future. Do not wait until you are 60 to realize you've been climbing a ladder leaned against the wrong wall. I know there is a fear crawling in the back of your mind right now. You're likely thinking, but Charlie, I need my job. I have a mortgage. I have a family. I can't just become an owner overnight. You are absolutely right, but you are missing the fundamental point. I am not telling you to walk into your boss's office and quit tomorrow. I am not advising you to take reckless, uncalculated risks with your livelihood. I am telling you to change how you think while you are still earning your paycheck. The real transformation happens in your mind first. You must stop seeing yourself as a victim who trades hours for dollars and start seeing yourself as a builder of compounding value. The external changes in your life, the wealth, the assets, the freedom, are simply the natural byproducts of that internal shift. What's remarkable about this mental pivot is that it costs you nothing. You don't need anyone's permission. You don't need a fancy degree or $1 million inheritance. You just need to start thinking differently about the relationship between your time, your value, and your wealth. Consider this. Two people work the same job, for the same salary, for the same 30 years. The first thinks like an employee. They spend the paycheck, they wait for the next raise, they hope for a better pension. They retire dependent on a system they can't control. The second thinks like an owner. They save aggressively, they study business models on the weekends, they acquire small stakes in assets, and they build skills that the market actually craves. Same starting point, same income, but 30 years later they exist in two entirely different universes. The difference isn't luck or IQ, it's the mental models they used to navigate their lives. However, you must be prepared for the most difficult hurdle of all, social proof tendency. Human beings are wired to want to fit in. Most people would rather fail conventionally than succeed unconventionally. Your colleagues won't understand why you're reading annual reports instead of watching the game. Your friends won't understand why you're investing in assets instead of buying a luxury car to show off. That social pressure is a wealth killer. But you must remember, in 30 years, they will still be worried about money. You won't. In 30 years, they will be hoping the system takes care of them. You will own the system. That is the ultimate payoff for having the courage to think for yourself. Finally, let us address an economic reality that most people are too terrified to acknowledge. The gap between those who work for a paycheck and those who own the assets is not just widening, it is accelerating. We are living through a tectonic shift where technology, automation, and artificial intelligence are ruthlessly rewarding ownership and scale while devaluing traditional labor. If you are still thinking like an employee in 20 years, you won't just be competing with other people, you will be competing with artificial intelligence and globalized labor markets that never sleep. That is not a pessimistic prediction, it is a rational analysis of the facts. However, here is the massive opportunity. The skills that make you think like an owner are the very same skills that cannot be automated. An algorithm can process data, but it cannot wisely allocate capital under uncertainty. A machine can follow instructions, but it cannot understand the deep nuances of human psychology or build a durable competitive advantage. To navigate this future, you need what I call a lattice work of mental models. Real-world problems do not respect academic boundaries. A business crisis is rarely just a business problem. It is usually a cocktail of psychology, mathematics, and complex systems theory. If you only think like an employee within your narrow silo, you are blind to the full picture. A lawyer who only knows law is at a massive disadvantage to a lawyer who also understands incentives, probability, and human nature. Multidisciplinary thinking doesn't just add value to your life, it multiplies it. My final advice to you is this: become a learning machine. Read the biographies of those who built empires. Study the history of financial bubbles to see where the herd went wrong. Master the basics of multiple disciplines. Every mental model you acquire is another tool that makes you more valuable to the world and more dangerous to your competitors. You are going to spend the next 30 years of your life regardless of what you decide today. You will work, you will make decisions, and you will grow old. The only question is, will you do it with the mindset of a servant or the mindset of a master? Will you reach the end of that 30-year journey with assets that generate income and a mind that owns its freedom? Or will you have nothing but a modest pension and the fading memories of a career you traded for comfort? You cannot trade your time for money forever and expect to be free. You cannot follow the herd and expect to end up anywhere but where the herd ends up. These are not opinions, they are mathematical certainties. But remember, the path to independence is open to anyone with the discipline to take it. You can hold a job today and think like a capitalist tomorrow. The transformation begins the moment you stop doing stupid things and start being rational. The door to freedom is standing wide open. The only question is whether you have the courage to walk through it.